Okay, everybody, let's catch up a little bit. And our shortened week here, we're halfway through this short trading week. Had a great Tuesday, had a good Wednesday. And of course, the jobs report's coming Friday before the open. So let's kind of take a peek where we're at. Here's the spider on a daily basis. And my perception of this is pretty straightforward. It all really comes down to three lines. One of the lines is the lifetime high, which is right here. And that high was achieved on the dark day of July 16, 2024. And only 2 days ago, we tried to match it and it failed. The next line is what I view as short-term support, which is this gap right here, 544.96. Again, this is the spider, the ETF. And I think it's completely plausible that we can seal that before this week is out. And the third most important line to me right now is this line here, approximately, give or take a penny or two. And that is essentially what I perceive as resistance, because this cute little semicircle here is the rounded top. And we slit through it on Tuesday, and we tried to push toward it on today, Wednesday, and it did not achieve that. So that is an important resistance level, and we can see this in a different way by way of the ES futures. This is the 5-minute chart of the past few days. So we had Thursday's weirdness, and then Friday's weirdness, and then we were high during Labor Day itself. And then the peak, as I mentioned yesterday, was in the wee hours of Tuesday morning, and it fell gloriously and bottomed almost precisely 24 hours later. And then today tried to stage a rally. So the market opened and it blasted higher, and then it got pushed down again, and then it blasted even higher still, and it peaked about 90 minutes into the trading day, and then sort of sold off for the balance of the day. So not much of a day. It's down 0.28% on the ES and the NQ. Not a lot of excitement. But the cool part is that the bulls tried to, and remember, for every one bear, there's 50,000 bulls. So the bulls tried to mount a counterattack, and they recaptured maybe a quarter of yesterday's drop, and then they just failed. So resistance in that aspect is somewhere around here. I said yesterday around 5,600. It didn't even get that high today, but somewhere in this vicinity is resistance. And if we dial this back to a 1-hour chart, we can see that we have been the bulls have been exhausting themselves around 5670. Here and here and here and here and here and here and here. Tried time and time again. This trend line was holding the back. Finally, we fell away from that trend line. And if we pull this back to a 4-hour chart, you can see here how meaningful the failure of that trend line was, and how the next, I won't use the word obvious because it's not, the next meaningful support level would be the Fibonacci. Although these aren't ironclad by any stretch, but they're the best we have. I mean, during the delicious plunge we had, this fib here was very potent. We cut a little below it briefly, and we matched it perfectly here, but this is very powerful support. Likewise, this will be a strong support right down here. Turning our attention to the NQ, and I'll just go back to the daily chart here by way of the cubes. It's a little bit of a different situation because we've already cut below the gap here. So that gap I mentioned on the spider, the cubes have already failed it. And and you can plainly see the difference. So in this instance, this was really at lifetime highs or very close to them, whereas the cubes were well below lifetime highs. So the cubes are much weaker than the rest. But on the On the futures themselves, this was the lifetime high zone, and we zipped up here, and since then, just lower high, lower high, lower high, lower high, lower low, lower low, lower low, all the way down. And the drum roll in the background is a guy, well, what about the jobs report? What'll that do? And it seems to me that, and I've said it over and over again, I think interest rates are heading much lower. I don't think it's going to do a damn bit of good for the economy. I think the Fed is going to morph from this sort of, I'm trying to keep this G-rated. They're going to morph into a great gift giver to bulls, into a feckless, impotent organization, slashing rates desperately to try to goose the economy and completely failing along the way. The aforementioned interest rate cuts will keep driving bond prices higher. As I've repeated endlessly, I am a precious metals bull, I'm a bond bull, and I'm an equity bear. And bonds have been doing pretty good. You can see here that they seem to be kind of bracing themselves for a breakout, which is exciting. And I just say again, the simple-headed 99.9% of people out there, not you of course, are going to be like, lower interest rates is good for stocks. Well, no, it's more complex than that, doofus. So, I think bonds will thrive. I think interest rates will crumble, but only because the economy is headed for absolute catastrophe. And that's the only tool that they've got to work with. Barring extreme stuff like, banning short selling, which will happen. They will ban short selling. They'll make it illegal to be a bear, which worked just peachy back in 2008. That was really the signal to go all in on the bear side, is when they, I don't know, some of you may not remember this, they literally made shorting illegal. They banned it as the market was crashing because they're disgusting. Bulls are disgusting pigs, and they will do anything they can to cheat. So that's the bond situation. As far as metals go, gold, has done a little digesting there, eased back a little bit, but we're still at 25, 26, very strong. And, I fully expect $3,000 gold and maybe even $4,000 and $5,000 gold in the future. There's going to be some backing and filling here and there, but I think gold's got a very, very bright future ahead. So, as far as my own positions, pretty fully loaded here. Yeah, I've got a little dry powder, but I'm pretty aggressively bearish right now, except in as much as the time, and this is just typical me, I've got plenty of time on these options, and literally and rather comically even have 2026 options. But on the whole, they're January 17, 2025. They by and large have 4.5 months, which is tons of time. Because you know what? A lot can happen in 4.5 months. I'll end it there. See ya.